Welcome back to the Dividend Diplomats YouTube channel. You got your broskies over here. Yes, the Dividend Diplomats, the best dividend investors here on YouTube. If you smell what the Lanny is cooking, guys, because we're going to bring you two stocks that are hot on the dividend stock radar. One stock I own, I'm pretty sure Bert owns them as well in a nice heavy drove. But one stock that we both don't own, but I do own one of the competitors. They have hit the news press for all of the wrong reasons in 2024.
Smash that subscribe button. Give this video a thumbs up. Everybody, rock with your boys and help us get to 19 and 20,000 subscribers. I apologize if I'm going to be a little short on this video. I have a pizza in the oven upstairs and it smells
That's true. It's
fantastic. I
damn
cannot
true.
cannot wait. So that's on my
He's just
mind
gonna
this
fold it
entire
in
video.
half, and then he's gonna fold it in fourth, and just
Yeah, I mean that's absolutely right. But nothing's more important. Eating can wait. We got to talk to you about undervalued dividend stocks right now. So we're going to run these companies through our stock screener, which features three metrics and a bonus metric: the PE ratio less than the S&P 500, payout ratio less than 60%, that history of increasing dividends, and that bonus metric, the dividend yield.
guys, the S&P 500's up over 8.5%, actually 8.74% at the time of this video, setting new record highs. We are filming this on March 7th here at night, guys. Yes, we burn the midnight oil, guys. It's almost 10 o'clock and we're cranking out videos for you, the community. Definitely make sure you check out Saturday's video on a certain consumer chocolate stock that everybody's raving about. But we've got two more stocks to talk to you about. One stock is really because they're down about 11% from last year. And, you kind of like them under a certain price that they're getting to. But the first stock that we're also going to briefly talk about here today, just to pull the band-aid, they've been in the news for a cyber attack. They've had some intrusions to their system. United Health, UNH. And Bert,
Ugh.
you know about IT, you know about tech. What is the last thing that anybody wants to be in the news for?
A cyber attack, especially when you have PII, you have sensitive information. I mean, this is why companies like Cisco exist, to protect companies like UNH and protect this data. And these are the most vulnerable companies to cyber attacks too. So it's not as if you're not prepared. It's just, can one sneak through the fire? Like, can one sneak through your security? And that's unfortunately what happened for UNH.
Yeah, it's costly. It shakes the confidence and all of the
Yeah.
thing about all of the businesses that, again, like Bert said, all the data that they have for employees and consumers. This is enough to make the boards of companies want to force the companies to switch
Yeah.
to get away from a company that has a
Yeah.
cyber attack. I mean,
This is gonna come up in every renewal. It's gonna come up in every single thing, unfortunately.
yeah, so they might have to be taking some price cuts to keep and retain consumers possibly here. And, we'll have to really see what happens with UNH. Again, has sent
Yeah.
the stock down this year by 11%.
But with that could be a potential opportunity for investors to consider that have a long-term mindset. We have seen companies make it through cyber attacks before. It might not be pretty in the short term. It might not be pretty in the 2 to 5 year horizon, but companies have had cyber attacks for years. They've had it decades, over the last couple decades. Like, it happens, and sometimes they create buying opportunities for consumers, and that's exactly what we're going to look at as we run them through our screener.
And I do own the competitor Elevance Health.
Yeah.
Ticker symbol is ELV. Thank goodness they haven't been in the news, but if they have been, let me know. But the other stock, guys, we're talking about the line that I see every morning, a line that happens at the ass crack of dawn. Everybody wants the cup still, the Starbucks, ticker symbol SBUX, and they have crossed below $91.
Nuts.
We're really looking for them at below 90 if possible. They're right there, right, guys? Let's go, Starbucks shareholders. If you own stock, let me know. Also, let us know what your favorite beverage is from Starbucks. Share it below in the comments.
I've been buying them this year. You know, I like this. We got my wife's position to 100 in her Roth, and for me, I forgot that I had 18 in my like traditional brokerage account too. So it's a chance for me to keep adding in my traditional brokerage now if I continue liking Starbucks.
Starbucks, guys. I know that's what we brew downstairs. They had a Target Circle, had a nice offer on a bag of Pike's Rose. So, we got the big bag downstairs, guys.
Don't even get me started on Target Circle and their chaos. That's a different video, but
Hey,
it's
that
for the
it could
share
be next day. Stay tuned
right
for next week.
next week. We'll talk Target. But all right, is it time to run them through the metrics here,
Yeah,
Lanny?
guys, we're gonna run through the metrics. We're gonna do metric by metric, not stock by stock today. Again, keeping up with the same consistent theme and feedback that you guys told us what you guys like to see. Now, if you guys like this, continue to let us know in the comments. If you guys want us to change it back to stock by stock, let us know as well, guys. All right, price to earnings ratio, Bert, UNH trade at 478.78, $27.80 earnings per share. Yes, that's not a typo. PE is at 17.22, so definitely undervalued right now comparatively to the competition and the stock market.
Starbucks is at 90.95. Their earnings per share is 406 at the PE ratio of 22.40. So yeah, not the cheapest. Cheap for his
Not the
for
cheapest. I
Starbucks
think it's
historical standard.
historically high, real high.
Yeah, it's like what we talked about with Hershey yesterday. Some stocks just trade at a higher PE multiple and are discounted compared to their historical standards, and that's exactly what Starbucks is.
Yep. Dividends, UNH pays $7.52 a year or $1.88 per share per quarter. This is why we all love these industries because it's a low payout ratio at 27%.
Yeah, absolutely. And Starbucks is 228. That's a payout ratio of 56.16. So both companies are below our 60% threshold.
They are there, brother. Now, the dividend growth rate for UNH, because the payout ratio is so low, and we'll get into the yield next afterwards, but the dividend growth rate's at double digits here at 16.16%. So 1616 guys doing it for 14 plus years nonstop.
Love it. And Starbucks, 9.79% 5-year dividend growth rate. They've increased for 13 as well. So they're right in the same ballpark here as UNH, just lower dividend growth and probably going to be lower dividend growth in 2024.
So dividend yield right now for UNH at the time right now is 1.57%, higher than the 5-year average of 1.37%. So 20 basis points higher, lower yield, higher dividend growth, and that's what you're going to get within this industry.
Yeah, and Starbucks is 2.51% on the dividend yield front.
The Starbucks 2.51%, greater than a 5-year of 2.02, a 49 basis point pump up on that. I mean, again, Starbucks is down 3%. UNH is down 11.25%. UNH is actually up since last year. Starbucks is also down since last year. I mean, Bert, I'm really liking Starbucks. Would
Yeah,
like to add them under $90 a share. So that's where my eyes are set.
you're almost there. I mean, I've been nibbling 1 or 2 shares at a time. I'm going to keep nibbling at these values. There's no reason for me to stop, especially as it keeps on falling.
And UNH could be an opportunity if you're not in the industry, guys. Since I own ELV, I'm kind of staying pat, riding with ELV right now.
Yeah, I'm gonna wait and see. For me, I'm not writing it off the watch list. It's still not quite there for me, but it could be a potential opportunity in the long run. I mean, it's not a, I don't know.
Guys, let us
I'm
know.
just
What
not
do you
like
guys think?
running towards like I need to do this one right
Guys, Bert's on a tight window here. This pizza is about to be finished.
now.
So what are you guys doing with these two stocks? Are you a buyer at Starbucks now? Or are you waiting for 90, 85, 80? Let us know in those comments now. Or are you guys staying away from UNH because you think there's going to be a big flea in their consumer base? Because and hey, you can leave at any time. You don't have to wait for renewal. It's an insurance company.
Yeah, exactly. I can guarantee you, Elevance, your company here, Lanny, is one you own is going to be
Come on
if
over.
if they haven't called all of UNH's customers by now, I'd be very disappointed. Then they don't deserve the revenue.
Oh, wow, guys. So let us know. Hit that subscribe button. Definitely like this video. Let us know what your favorite frozen go-to pizza is as well in the comments below. Guys, appreciate you for rocking with us. Bert, any other parting words you have for the community?
You're either with us or you're against us, Jack.
That was Bert the Herd and Lanny from the Dividend Diplomats over and out.